Okay, today I'm going to be going over a brief analysis of Sibanye-Stillwater, and this is basically my favorite stock for rhodium, for platinum, for palladium, for gold. It's kind of a combination of all the different areas, but rhodium's really where it's at for this stock. Okay, so Sibanye-Stillwater, this is recorded April 15th, and the stock is currently $20.26 USD. So who are they? So they started out as a South African gold producer in 2012. Basically, they were a spin-off from Gold Fields, which is a company in South Africa, and they had three very large, old, unprofitable mines. I believe that these mines were in production since like 1920s, somewhere in there. And just based on good management and stuff like that, they were able to turn these mines around and actually turn them into cash cows. And so what they did with this money is they went in and started buying platinum group metals between 2014 to 2019. And they made a number of acquisitions. They bought some platinum mines from Anglo American Platinum. They also acquired a number of different companies. They acquired Stillwater, which is how they got the second half of their name. They recently acquired, I believe it's Loman, and there was, I think it's Aquarius Platinum, is another company that they bought. So basically, at this time, it was when platinum group metal prices were really low. And so they're able to get these mines because they're fundamentally unprofitable. So they got them at really good deals. So now this company is the world's largest platinum group metals producer and a top 5 gold producer. They've gone from making $5 billion in profit in 2019 to $1.7 billion in 2020. The ticker symbol is SBSW for the New York Stock Exchange and SSW for the Johannesburg Stock Exchange. So market cap's currently about $14 billion and PE ratio is about 6.79. Okay, so why get excited? So the platinum group metals are going through a massive breakout right now. Kind of like over the last year, we've kind of like seen all this like money printing, government sending stimulus checks out to everybody, having them do nothing. And a lot of people have been looking to gold and silver to be performing and wondering why they're not. But these other metals that don't get a lot of attention, rhodium, palladium, iridium, have all gone crazy. Rhodium is going to be the focus of this presentation, but they've all kind of broken out. And so this company is making a lot of money off of that. They also have massive reserves of metal in the ground. So in total, their reserves are worth about $1 trillion at today's spot prices. Reserves and resources. So it's kind of like all the metal that they've got in the ground. Massive forward-looking earnings. So I estimate that their forward PE ratio is somewhere between 2.5 to 3.5 based on current spot ratio or spot prices. So basically, it's like, let's say that their price is $10 billion. It means that they're making like $2.5 to $3.5 billion each year. And so it only takes like two to 3 years for them to actually make back in profits all like the total cost of the company. And then so out of those profits, there's a company mandate that says that they pay between 25% to 35% of their earnings back in dividends. So this ensures that shareholders are actually going to get a good portion of that money back to them. They have exposure to like all the different metals. They have platinum, palladium, gold, rhodium, iridium, and erythrium. Iridium and erythrium are kind of smaller and aren't as popular, but they still play a role. And then they also have extremely intelligent and competent management team. This management team has shown that they can come in South Africa where it's like there's lots of labor strikes and there's lots of issues around that. And a lot of these companies are just saying like, we're out of it. Anglo American Platinum has kept saying it's like they want to reduce their labor force and focus just on using technology in order to mine effectively. Whereas Sibanye-Stillwater seems to be very good at actually figuring out how to work with the people, work with their workers, and to turn these mines around and to increase morale and get everything going and basically take unprofitable, unproductive mines and turn them into profitable and productive mines. Okay. So rhodium is the main focus for this presentation, and basically it's like rhodium has been going Bitcoin over the last 5 years or something like that. Rhodium back in 2016 had an average price of $663 per ounce. Currently, today, it's around $28,700 per ounce. So that's a 4,228% increase, which is absolutely nuts. And so the average annual total production of rhodium is just under 600,000 ounces a year. And so Sibanye actually produces 123,000 ounces a year, which is about 23% of total annual production. So it's kind of like, imagine if you're able to mine Bitcoin and you're actually able to mine, 23% of that annual production of Bitcoin. It's absolutely nuts how much they're actually able to make from this. So an estimated production value just based off of how much they produced last year and how much the spot price is right now is just under $4 billion. And this is, again, a company that's worth $14 billion right now. And so this is just a small piece of their revenue. So if we go over their overall production profile, so we got platinum in there, and they're producing just over 1 million ounces of platinum a year, which is 32% of their production. And right now, platinum prices are quite low. I'm actually quite bullish on platinum just because it is extremely low compared to everything else. So it only makes up 14% of their actual revenues. Then we have palladium, which is 28% of their production, and it's 27% of their revenue. So palladium prices are actually quite high compared to historic mean. So they're actually making a fair bit more than they normally would be on that. Then we have rhodium, which is only 4% of their annual production, but it accounts for 37% of what I estimate to be their going forward revenue, which is nuts. It's basically like they kind of attribute rhodium to being like the big transformation for their business over the last year. We have gold. So they're producing just under 1 million ounces of gold, which is 29% of their production. And gold prices are decently strong. It's like a lot of the gold producers are making a lot of money at this point. So it accounts for 18% of their revenue. You have ruthenium, which is 6% of production and 1% of profits. And Rhodium, which has recently gone from about $1,000 to $6,000 as being 1% of their production. And what I'd account for is 4% of their revenue going forward. So it's palladium, rhodium, and iridium that have been going crazy in price. Gold's been holding strong. Platinum's definitely been underperforming, but just over the last year, it's gone from about, let's say, $600 an ounce was kind of like the low back in the COVID crisis market meltdown, to now it's trading about $1,200 an ounce. And I have a feeling that it can go a lot higher over the next probably 5 years or something like that. I could definitely see platinum prices being about $4,000. So, projected earnings. So, we have the mining costs. So they break it down into 3 different categories. So they have the U.S. mining, which is primarily the Stillwater production. So they have palladium and platinum that comes from there. All-in sustaining cost is $874 per ounce. They produce about this 600,000 ounces. So we have total cost here of 527,000 million, probably million. Yeah, million. Okay, and then we have the South African Platinum Group mining, and then South African gold mining. So these are 2 different operations, and they kind of break it up that way. And then we have our all-in sustaining cost here of $1,100 and then $1,400. $1,400 for gold is actually quite high. Just looking at it now, is that a lot of the gold mining companies I like are probably closer to $900 to $1,100 for all-in sustaining costs. So that's definitely on the high end of the curve. So we get here total, so we have basically like $3.6 billion total for production costs. So market cap is 14 billion roughly. Projected revenue based off the previous page is 9 billion. And so projected earnings, you basically just take this 9 billion and minus it from this production cost here. And so we get approximately $5.6 billion in earnings. So this is projected PE ratio of about 2.58. I'd say this is probably on the more optimistic side, and it definitely could be a lot lower than this. I wouldn't say too much lower, but I'm not 100% clear on how to calculate all the mining costs and all that kind of stuff, and knowing exactly what's going on in the business, because it is a big company and there's a lot going on there. But just kind of like off the kind of like the side or whatever of like calculations of what I could do, it's like this PE ratio looks absolutely fantastic. And even if it had a PE ratio of 4 or 5, it's still a great buy. Okay, so now we go over to reserves and resources. So they break it up into their platinum group metals and their gold. So we total it up, and we have 82 million ounces of reserves and 480,000 ounces or million ounces of reserves and resources. So basically, if we total up the total value of everything that they have in the ground, it's just under $1 trillion US. So that's a lot. And it's like if you just divided this, so it's like, here's how much we have in reserves, and we divide that by our concurrent annual production, and we've got enough, if we've got enough just reading the reserves to produce for about 25 years. So these are very long lifetime mines. It's not something that like the whole company is going to be shut down in 8 years because they just run out of things to mine. And then Impala Platinum, I'd probably say that's Sibanye-Stillwater's top competitor, and a company I like, but they're just not at quite seeming at the same level as Sibanye, is that they have 324 million ounces in reserves and resources, and they don't actually have the same kind of gold assets. Their focus is just the platinum group's metals. And what they have, so they have about 30% less than Sibanye, and basically at the same cost. So to me, Sibanye just seems like a better value in that respect. And then we'll go over a quick balance sheet. So right now they have about $1.4 billion in cash. They have debt of $1.2 billion. They have equity in DRG Gold, which is about 432 million. I believe they own about 50% of the company. So the net value of this is that they have about $560 million, kind of just in net value from that. And we're looking at a dividend of about $1.37 per year. They paid out, I think it was 69 cents in the last dividend, and I expect them to do that once or twice per year. So we're looking at about 7% yield, somewhere in there. So the main benefits is that we have diversification of income. So one of the big benefits this has over gold companies is that we're getting to pick up on the high rhodium prices and the high palladium prices right now, and we're not having to wait for gold to go up to $2,500 or $3,000. But if gold or platinum does go up, we get the benefit, we get the upside of that too. So we're basically being able to buy the stock at a very cheap price, like probably even cheaper than the gold stocks, which a lot of these mid-tier gold companies like B2 Gold or Ken Ross and stuff like that are trading super cheap. They're trading at like a 6 times PE ratio, which historically is extremely abnormal. But we actually have kind of exposure to all these different metals, and it kind of diversifies and spreads out the income stream profile that makes it a lot less susceptible to downside pressure. I'd say the one weakness with Sibanye is that if the rhodium price does fall significantly, that the profits could fall significantly as well. If the rhodium price came back to $8,000 an ounce, that definitely hit their profits pretty hard. But it's like if the rhodium price goes up to $50,000 an ounce, it's like, that's great. Like they're just going to do fantastic. So extremely high cash flow for super cheap valuation, really like that. Large upside potential, again, if gold to platinum prices go up. Rapid paying down of debt. I didn't quite cover that so much with this one, but they've basically, it's like, I think their debt went down about like 40 or 50%, and their cash just went through the roof. And it was that big transformation. We go back to like the transformation to 2019 to 2020, that 2019 they made $5 billion in profit, and they had like $1.7 billion of profit in 2020. So it's basically like this money came to paying down debt and increasing cash. So they have North American operations. So primarily platinum group metals are produced in South Africa, in Russia, I believe it's Zimbabwe. Those are kind of like primary areas, but Sibanye actually has production in, I believe it's Montana. So they add a bit of diversification of the risk there. They have lots of development projects. I haven't done a full analysis on that, but they bought in all these different platinum companies. And it's kind of like they all have these different projects that they just kind of accumulated from that. And so one of the companies, I believe it is the Marathon deposit in Ontario, and Generation Mining actually did a JV with them, where they're basically like, give us the property, we'll do drilling, we'll bring it into pre-feasibility, feasibility study, and then we'll actually develop it. And so it's like Sibanye's like, sure, like let's do that. Let's create a joint venture there, because we've got enough on our plate right now where we're focused on like our own development projects, and we're focused on continuing our mining operations. And this asset would probably just sit on the sidelines. But it's like, hey, let's do a deal here where we're giving out some values so that we can create like actually move a mine forward into production and stuff like that. So, and they have another one in Argentina, I believe, with a gold copper deposit that they're doing a similar kind of JV on. It just seems super smart. Instead of spreading yourself too thin, it's like, let's find some other people with talent and skin in the game and get them kind of benefiting for the company as well. And then it's like dividend twice as high as most gold stocks. So most of the gold stocks are trading around like 3% dividend, which is pretty good for the gold stocks, but it's like Sibanye trading at like a 6 or 7% dividend. It's like, that's fantastic. So it's like, there's all this kind of accumulation of benefits, and I think it's because platinum group metals have kind of been undertold in the story, undershared. Nobody's really paying attention to it. Most people are paying attention to like silver, gold, and stuff like that. But I think over the next 1, 2, 3 years, that platinum group metals will definitely get their spot in the sun. So yeah, if you have any other comments or questions, put them into the comments box, and I will try to answer them. Thanks for watching.